All right, guys, welcome to the six-figure Forex Blueprint Strategy webinar. I'm your host, Chaz Wolf. Thank you guys for all joining. I know some of you guys are getting off of work or getting out of school, whatever the case is, but appreciate you guys taking the time out for joining this webinar. First off, second off, or just taking the time to better educate yourself, whether you guys are already doing well in Forex, whether you guys need a little bit of help and just looking for guidance, looking for a solid strategy that's gonna be able to help you guys and enable you to grow as a trader. Whatever the reason is, thank you guys for hopping on and tuning in. I'm gonna make this very brief. I'm gonna explain this as simple as possible. The way we're gonna outline it, I'm gonna tell you a little bit more about myself, and then go into the strategy, have a short Q&A at the end, and then we'll wrap it up, okay? So the first thing, guys, I just want to go over with you guys is, first, as I said, if you guys don't know me, my name is Chaz Wolf. I've been trading for about 4.5 years now. So when I first started trading, or before that, I was playing professional soccer. I played professional soccer for 3 years, but I've been playing soccer my whole life before then. And, you know, it was one of those things where I wasn't really good at too many things because I devoted my whole life towards soccer. So when I had a career-ending injury, or injuries, I should say, in 2015, I didn't know what to do from there. I didn't want to get a regular job. I didn't want to do something that was going to, I guess you can say, not keep up with the lifestyle I was currently living, right? No one wants to work, of course, but, you know, at that point, I was just kind of hurt, you know, sad that my career has come to an end, but I needed to find something. So I found Forex, thankfully, just on social media, like many of you guys have, whether it's through a friend of social media, through a stranger. And what happened is I began to take full advantage of what was given, because a lot of people didn't know what Forex was at the time. And I lost a lot of money in the beginning because of greed, because of me not being patient, because of me not trusting my strategy. And that's what I'm gonna go over with you guys in a little bit here today, are the 3 components of what you need to become a successful Forex trader. You need to have patience. You need to not be greedy. You need to trust in your strategy. A lot of you guys probably aren't greedy. You guys have patience, but you guys just don't have a solid strategy to go off of that works. So that's what I'm here for, all right? Some of you guys don't have the right mentorship or the proper guidance. Well, that's what I'm here for as well. And some of you guys just probably, have no patience and greedy, which, I'm here for that. If you guys do need, if that is your issue, if you guys know that that's your issue, those are the 3 components. So when it came to me learning, like I said, I lost a lot of money. Being greedy, want to make $1 million, but I knew that it was possible, right? I wanted to make $1 million tomorrow. I bet you we all went through that, right, as traders. And so what happened was, when it came to the realization of, you know what, I need to make this work, but I need to be patient and to not be greedy. I need to trust what I'm doing. That's when things started to fall into place. In 2015, I actually paid a Wall Street. He was a Wall Street trader, and I paid him. I'm going to be honest with you guys, close to around $10,000 as well. It was about $9,600 total. I paid him to teach me the way that the market moves, how it works, what are some of the secrets in the market. So I've been fortunate enough to not only learn from him, who worked on Wall Street for over 15 years, I think it was around 17 years, and for him to teach me some of the secrets of what the market makers do, and how hedge funds work, and what is actually needed to be successful in the industry, in the market. And I've been able to carry that on and teach that to my students from there on out. So that's why I'm so passionate, because I know what it takes and what's needed to help people out in the market. And that's what I'm willing to give to you guys, okay? So the one thing I'm gonna go over with you guys is the strategy, okay? That's the main thing. That's what everyone's here for. Sorry for that noise in the background. As you guys do know, that's MetaTrader 4, connecting and non-connecting, right? So the first thing is, I wanna go over with you guys the strategy, but first, I just want to kind of let you guys know a little bit about, what I've been able to do for my students. I told you a little bit about what I've been able to do, but I've been able to, fortunately enough, create over 35 students who make either high 5 figures or 6-figure incomes trading the markets. I'm not going to sit here and say I made $1 million in the market. I've been trading for 4.5 years. Probably 3.5 of those years were profitable. And, I I haven't done 1 million, but that's my next milestone, right? But I've been able to help over 35 students be able to quit their jobs, pay their school loans, pay their medical expenses if they had any, etc. And that's the overall reason why I love teaching and why I love trading, is because it enables me to be able to help you guys out. So with that being said, let's go ahead and get into it, guys. Now, if you guys are very new to this, if you guys don't have too much knowledge, it's okay. I'm gonna walk you guys through this as simple as possible and be able to, obviously answer some questions here and there, but I wanna make sure I show you guys, for those who just need a successful strategy that works, I'll be able to give you guys just that, okay? So the first things first, guys, there's something called higher highs and lower lows, okay? So the reason why you're going to want to know what that is, because that's the overall base. That's the most important thing you need to know in the market. When I first learned from the Wall Street trader that I learned from, he told me something that was so simple that everyone knows, but no one's really putting too much thought into. You want to buy low and sell high, right? And at the time, it was very vague. I didn't understand. I didn't know what that meant, really. And it kind of pissed me off. I'm not gonna lie, because it's like, okay, how do I know when to buy when it's low? How do I know when it's low? How do I know, if it's not gonna continue to go down if I buy when I think it's low, right? And a lot of you guys probably have had that same kind of thought process, but there's ways that I've figured out of how to find the low in the market and how to execute trades based off of the lowest point of the week or the day, and how to catch that buy for the overall move, and when it's at the highest of the market for the week or the day, and how to catch that drop, right? Which I'm gonna be able to show you, okay? So there's something called a lower low and a higher high, okay? Remember that. Now, when it comes to a lower low, okay, a lower low is simply, I'm gonna go ahead and text on here, okay? A lower low is when the market is at its lowest point, right? Sounds simple, sounds vague, right? You're probably like, okay, what does that do for me, right? Well, that's important, okay? At its lowest point. That could be for the day or the week, right? Now, another definition of what a lower low is, when a low point is lower than the last low point. Now, this is the part where I had to figure out, okay? I had to figure out how to find that right there. How to find when it's lower than the last lower point. So I've invented ways that you can do so, okay? So what it is guys, it's this simple, okay? Let's do this higher high, okay? Now a high point, okay? A high point is a high point that is, higher high. A high point that is higher than the last high, okay? So what this means is, okay, you see these lines up here? This is your 80 line, 50, and 20, right? When the market, you see this blue line right here? This blue line replicates the market. As you guys see here, it drops down here, this dropped down here. It went up here, this went up here. It's an exact replica of the market. Now, this is very important down here because when the market goes above this top line, these are high points. These are high points, okay? Now, let's do some marking, okay? So I'm gonna make this orange just to kind of do a color differentiation, okay? So this is the high point in the market, right? Let's say that the market is right here, up here. You don't see all of this, okay? Let's say the market's up here. What I would do is I would ask myself, because this relates to this, right? This is up here, they're even. I would ask myself, when's the last time that it went above the 80? But this would be higher. So the question is, how could I find when's the last time it was above the, it was, at a high point. A high point is when it is above the 80, right? These are all high points. When the market goes above the 80, it's a high point. Now you got to figure out which is the ultimate high point that's going to allow you to catch this big drop in the market, okay? The way you do that is very, very simple, okay? Do not overcomplicate this part. A lot of people tend to do so. It's as simple as if you can count to three, if you have eyeballs, and if you can understand basic comprehension, then it's as simple as that, okay? So the last time that it was above the 80, okay, I like to call this middle line a reset, okay? Because you see how the market is traveling above this 50. It goes below the 80 here a couple times, but that doesn't matter. It's above the 50. When it hits this 50, that's called a reset. Then you're gonna look at when it goes back above the 80, which is right there. All you're gonna do is you're gonna mark that as well. And that evens out to this, as you see there, the exact same area, right? Look at this. We'll just make this like red to match it, right? Which one is higher? I want to see in the chat which one is higher, the one to the left or the one to the right. Put in the chat. Put R for right, L for left. A lot of people are saying right, right, right. Okay? Exactly. It's that easy, right? You're taking the high of this area above the 80, right? The 80 is right here. The high of this, and you're just tracing. So if I were to, I'm gonna go ahead and annotate for you guys, okay? If I were to start here, it's above the 80, and I were to trace this, I'm gonna go until the next time that it goes below the 50. That's called a reset. And then I'm gonna go and see when's the last time it was above the 80. That's all I'm gonna do. And then I'm gonna compare which one's higher. That's how you find your higher high. That simple, okay? That simple. So once you find your higher high, the next step, okay, so now we knew which one is higher, right? Oops, sorry about that. All right, so now we know which one's higher. The next step that you're gonna do is now step number 2 is, I should probably write this right here for you guys. So step number 1, find high point, low point, okay? Right now we're on the high point part, okay? Step number 2, find zone. I don't know how much I can stress out how important this part is, okay? Remember I talked about that reset? Remember that reset area? You grab your horizontal line and you put a horizontal line right there. I'm gonna make this a little bold for you guys so you guys can tell the difference, okay? Actually, I'll probably make this orange so you guys can see the difference. Make it probably a little bit easier. You found your high point. Remember that reset? Right there? That is your zone. The reason for a zone is to pick out what part in the market needs to be broken in order for you to know what direction it's gonna go. Think about an apartment complex, okay? If you're in the 3rd floor of an apartment complex and it only has 3 floors, if you're in the 3rd floor and if you were to take a bowling ball and slam it down hard as you can on the floor and it were to make a hole into the floor, where is it going? Is it gonna levitate? Is it gonna float in midair? Is it gonna just hang on the 2nd story's roof? Or is it gonna go down to the 2nd story's floor, right? That's called a drop. So look what happens. The market goes, it breaks this zone, and I'm gonna get to this part, you know, where to enter and stuff like that, but look at how far it keeps going down, right? That's what you want. You wanna find what part in the market is strong, right? To where if it breaks, it's gonna continue going in that direction. So there's certain secrets in the market that I was taught by my original mentor that worked on Wall Street. And he told me exactly this. The market is gonna do the same thing over and over again, 9 times out of 10. Now, that's why trust is very important, because once you have a solid strategy and you do it and you trade it 10 times, if it's good enough, you should win 9 out of 10 of your trades, if not all. Okay? So what happens is, as soon as you understand the way that the market moves and you have patience, right? That's the next one, right? Trusting the strategy and patience. Then you're going to be able to find these plots in the market and be able to take advantage and punish the market for as many pips as you choose, right? So what's going to happen is, we found our zone. This is a strong area, which is also called the reset area, right? Once it broke, the next step, right? I'm going to do step number 3 right here, so you guys can see it. Okay? Step number 3, pull back. This is probably one of the easiest parts of the strategy. Okay? Pull back. A pullback is simply this. You see this down here? Once it breaks your zone, all you're going to do is wait for it to pull up to this red line. Because remember, again, you want to buy low, sell high. We're selling. This is a higher high, right? A high point in the market, you want to buy low, sell high. So after it breaks your zone, you're going to let it pull up. This is where you're going to enter the trade. Enter trade. Make this a different color, kind of spicing it up a little bit. Enter the trade. When it pulls up to this area, it's called the 85. Okay? That's exactly right there. As you see, I'm gonna put a vertical line for you. One moment, sorry. Right there. Right? I'm gonna put it a little bit to the side. Once you enter a trade, your stop loss, you're gonna take 2 trades, okay? Your first trade, the stop loss is gonna be up here. Now, my mentor told me that when you're entering a trade, do not put your stop loss of how much you don't want to lose, or how much you are willing to lose. Put it to where the market cannot reach. And if it does reach it and hit your stop loss, you know that you were completely wrong, and the market's going to completely go the opposite direction. Okay? That's where your stop loss should be. Your stop loss shouldn't be, oh, I want to make $100. I want to make $1,000 from this trade, but at the same time, I don't want to lose 1,000, or I don't want to lose 100. That's not how you should be trading. Focus on risking only 1% per trade, 5% on your account total, and you will be fine. You will not be stressed about losing a trade if you're practicing the proper risk management, right? So entries right there, stop loss. You see that middle number right there that's calculating? It says 951 right there. That will be your stop loss, okay? 951 micro pips, which is 95.1 pips, okay? Your take profit for the first trade is going to be exactly equivalent, 951. As you see, it hit that within probably an hour. It just dropped down right to that area, okay? Now, your second trade, okay, you're going to take 2 trades at the same time. The first trade is going to be that, okay? Once you place those parameters, your stop loss and your take profit, your second trade is going to be at the same entry. Your stop loss is going to be the high above the break, which is in this case 280, probably 280. Let's just say 280. Your take profit, you're not going to have a take profit. You're going to have what's called a trailing stop. A trailing stop is what allows you, if you're not familiar, is what allows you to stay in the trade for as long as possible until it pulls back the amount that you want it. The pullback that you're going to have it automatically take you out at is just going to be half of what this is. So if your take profit is 95.1, right? then divide that by 2, and that'll be your trailing stop, which means that if it goes up half of that, let's just do even numbers. Let's say it was 900 is your take profit, right? 450 is your trailing stop. So that means if the market goes up 45 pips or 450 pips against you, it's gonna automatically take you out. The reason why we do that is because if it keeps dropping, right, you wanna make the most possible off of that trade. So with this trade, you would have made 95 pips, which is 951 micro pips, okay? And then the second trade would have kept going down, and I don't think it went the opposite way, 45 pips, until, let's see, until here, till right around here. So that means that from here to here on the second trade, you would have made 130 pips, which is 1,300 micros, and the first trade would have been 95 pips, which is 950 micros. So that's a total of 95 plus 130, 225, right? 225 pips on this setup in one day. That's only this pair, Euro USD. All right, now let's do a quick Q&A off this setup. I'm gonna show you more setups, but I just want to, before we move forward, I wanna see if there's any questions on anything that I went over. And I did forget to put here, step 4 would be enter. And then step 5 would be trailing stop, of course. Put in the chat if you have any questions in the chat while I do this. Okay, let's read this. Let's read some of the Q&As here. Let's see here. I think I put text. It's okay. Whatever. You guys understand the point of that. That's the trailing stop. Let's see some questions. Let's see here. Yeah, so I'm risking 1% of my balance each trade. Okay. All right. So let's do another setup. Okay. And these indicators are special indicators that I have, that I have access to that I'll have to send you, obviously. They're special indicators that I had made, or I had edited and specialized for this strategy. All right, let's do a buy setup, okay? So buy setup, right? This is your lower low. I'm gonna use a different color, right? And why is this your lower low? Because, let's go ahead, I'm gonna go ahead and draw again, okay? My drawing skills aren't that good on here, so forgive me. Right, this is where the market's at. The next time that it goes to the reset area, which is right here, and then goes down to the 20 is right there. So that ends up being right here. If you were to do a straight line through down, that's this. That's that. Put in the chat, which one's lower? This or this? In other words, this area or this area? Right or left? Right, right? Very simple. Okay, so guess what happens? You wouldn't guess it. This is your lower low. That's it. Now, where's your reset area? Your reset area is right there. You see that tip point right there on the reset? That's where your zone's at. Let's make this blue as well, or baby blue. All right. So we follow the market. The market's going. The market's going. What do you know? It breaks. It breaks. It pulls back. And once it breaks, what's the next step? We're going to this, to the 15, which is right here. I don't trade during lunchtime. This line right here, I don't trade after 2200. You see in the bottom of the screen, it says 2200, 22 o'clock, or whatever you want to call it, 2200 hours. I don't trade from 22 to 2. In between that, I don't trade. So I'll wait until after 2, and I'll get in right there, which is below the 15 again, right there. Stop loss is below the low. The stop loss is, let's see here. Stop loss is, what is that? 140 pips, right? 1,400 micros. So let's put the entry right here. Entry would be right there. Take profit would be equivalent, 1,400 or 140 pips, which that happens within a day and a half, right? So again, first trade, stop loss will be the low before the break, which is this, okay? The first one should be down there. The second trade, the stop loss should be right here. And then let that run. So if you were to let this run, you can easily get 200, 150 pips on the second trade, and then 140 pips on the first. So that's around 300 pips total or more. Probably a lot more, to be honest with you. I'm just paraphrasing here. Probably, yeah, around like 400 pips total, okay? I'm gonna do a couple more steps and a short Q&A on the strategy, and then that'll be it. So let me see here. So let's do a higher high. Right? This is your higher high. I'm not gonna change the color. It's too much work right now. Where is the last time that it went below? Right here. It went below right here. This is the reset. The last time it went as a high was right here because this is the reset, right? So which one is higher? This one or this one? Very simple, that one. We're waiting for the break. It breaks. Once it pulls back to this, stop loss is 550, take profit 550. Second trade, take profit would be, it wouldn't be no take profit. It would just keep on going down as you see it keeps on dropping until it pulls away the opposite way, half, which probably will end up being right around there, but you would get a lot more pips than the original one. All right, let's do a short Q&A, guys, and then let's go ahead and wrap it up. Let me see here. Yes, the parameter they're still the same. You can trade this on your mobile phone as well. One of the questions was, will we get the same parameters for mobile? Yes, you will get. You'll be able to get that as well. So it's the same thing. You can have it integrated that way as well. Any more questions in regards to the strategy, and any questions in regards to something that you maybe didn't understand too well? 5-minute time frame. This is based off the 5-minute chart. What pairs do I trade? I trade for this strategy, Euro USD, Australian USD, so AUD USD, New Zealand USD, USD JPY, and USD Chef. Those are the 5 pairs that work amazingly well with this strategy. Again, USD JPY, USD Chef, NZD USD, AUD USD, Euro USD. I do not trade with this strategy, anything with GBP, because it does not follow the parameters too well. And I don't trade anything with CAD because any Canadian pairs, they don't pay out as well. Second trade, okay, I'll go over the second trade again, no worries. So this is the second trade, okay? So we're looking at above the 80, right? It went above the 80 because it's at a higher high. The reason why it's a higher high is because the last time that it was above the 80 was right here, okay? So you're comparing, this is called a reset. Remember, when it goes below the 50, it's called a reset. That means that it's giving it's like a refresh, so that you have a separator in between this 80 and this 80. It's 2 different highs. So the market's up here, it separates, and then it creates a new high. Which one's higher? This one. You put what's called a zone, a horizontal line, on the bottom of that reset for a sell opportunity. When it breaks the zone, wait for it to come up on this indicator down here, and then your entry would be right around here. Stop loss is up here at 550. Take profit will end up being at 550 as well, which it keeps dropping. The pullback, yes, I can explain the pullback. So the pullback right here, so what you're doing is once it breaks your zone, okay, That's right here. You're waiting for it to go above this 85 over here to the right, which is this red line, because you want to get in at a good price. You don't want to get in down here because look at that's 15, 16 pips difference that you could have saved. So you want to get in once the market recorrects itself and pulls back. Because once it breaks a zone, it will come back towards the zone, this blue line. So you're going to want to get in when it goes above the 85 after it breaks. And yes, guys, I do personal mentoring, okay? So if that's something that you're interested in, message me for personal mentorship. And as well as that goes, one thing that you can do is you can ask me questions, you know, personally based off of, you know, what's going on, you know, with the strategy, how does it work, etc. And yeah, I mean, it's pretty simple as you guys see here. 2 trades, okay, that's fine. So 2 trades, what I mean by that is instead of just taking one trade here, you're gonna wanna place 2. So you're gonna wanna place 1 trade that will be stop loss will be up here, take profit will be up here. I mean, take profit will be down here, sorry, with the same coordinates, right? And then the second, you're gonna enter another trade and the stop loss is going to be either you can pick the same spot or you can just put the last high, which is probably right here. And then you won't have a take profit for the second trade. You just let it run and you put a trailing stop, okay? No problem. So yes, it is. So so yeah, is there any more questions before we wrap up the webinar? It is a pretty simple strategy, obviously. You know, like I said, the 3 things that is needed is, for 1, patience. You need no greed. And you need trust in the strategy. This obviously has been a proven strategy to work for more than 35 of my students who made a lot of money trading exactly this way. I mean, a lot of you guys only need a personal mentor to kind of guide you. And that's what it's all about, because this is the biggest industry in the world. If you do not have someone to guide you and someone to hold your hand, it's going to be very difficult, you know, to be successful. I know a lot of people who've been trading for 3, 4, 5 years, longer than me, and still haven't found that right strategy or still haven't found that right mentor, because at the end of the day, you know, it's with the biggest industry in the world, you're going to need some guidance. And when it comes to, let's say, for example, you wanted to play professional basketball or you wanted to play professional football, right? If you don't have some kind of personal trainer, if you're not taking it to that extent, the odds you become, you know, going pro is probably slim to none, right? So that's what I'm here for. I do personal sessions, and you know, if you want any information with that, you can contact me. I'll send the link there, or after this webinar, you'll be able to have access to the link to get details on the personal mentorship. But let me see if there's any questions. Yes, I will be doing that as well, okay? Yeah, so, and then news ends up, I had a question, do you avoid news? News ends up correlating with the strategy, because the thing is, guys, when it breaks your zone, right? When it breaks your zone, that means that the market has been broken and it has to correct itself by going in that direction. So same analogy that I use with the apartment complex, right? If you live on the 3rd floor and you bounced a bowling ball through the floor of the 3rd floor, it's gonna go into the 2nd story, which is your, you know, the people that live below you. It's gonna go into their unit, right? There's no stopping it. You know, even if you were to be there to catch it, you're gonna probably end up falling with that bowling ball because it has so much weight. So this zone represents weight and strength in the market, to where if it gets broken, 9 times out of 10, it's gonna continue in that direction because it has to complete its move. We'll wrap up a couple more questions and then we'll be out of here. Yes, I'll share the link for a replay, of course, for you guys. And then, but if you guys do have personal mentorship, if you guys do get personal mentorship from me, you guys will be able to have automatic access to these videos broken down into 4 different videos, which are shortened. And so what that means is, you know, for step 1, you have a video based off of step 1. You have a video based off of step 2, step 3, step 4. They all will have different ones. And then you'll be able to also trade with me with this strategy. So thank you guys for hopping on. I'll send the link I'll send the link on the next page for you guys. And yeah, you guys will be all set. Thank you guys for joining the webinar. If you guys have any more questions, you can personally message me, or follow the link on the next page, and then you guys will be all set. Okay. Thank you guys for joining. Take care. Have a blessed night, and take care. Okay. No problem. No problem. Appreciate you guys.